Thanks for staying with us. You're watching Tracking Trends with me, Nikunj Dalmia. Over the next 30 minutes, we'll talk about trends which could move your portfolio, trends which will help you make money, trends which you can understand and utilize and in a sense use to advantage. And today we'll be extensively talking about real estate sector. I'm going to set the tone that what is the show all about today. It's about real estate stocks. Before we do that, here's a look at the market headline and what are the key highlights at least for this Wednesday afternoon. Choppy trade in Nifty. Nifty is below 21,500, but it is choppy. Markets have not fallen flat. It is not any kind of a financial reversal, so to speak. Broader market, they underperform, but that was unexpected lines. Nifty and the Sensex is doing relatively much better. Breadth is in favor of declines. Broader market is underperforming. And Nifty media, courtesy Z and some other media stocks, is firmly in the green, while real estate stocks are coming under pressure. So the point what we are discussing today is that after a 100% rally in real estate stocks, almost 100% rally in real estate stocks, are real estate stocks looking good for more? In last 1 year, Prestige Estate has appreciated by 200%, Shobha 100%, Macrotech double, it's got a market cap of 1 lakh crore, DLF is up 100%, and Brigade Enterprises also has seen an appreciation of nearly 100%. So where are real estate stocks headed, and is it time now to really get out of real estate stocks, or one should continue to stay with real estate stocks? So technically, let's first understand the picture from Kunal, who will just walk with me on the screen, and we'll talk a bit about real estate stocks. First, let's take a look at the real estate index. What do we have, Kunal? Real estate index up 100% in last 1 year. Rarely an index goes up by 100%. Rarely. I don't think too many indexes have gone up by 100% in a year. In the history.
I think in the history it's very rare, and that too consistently. So it's not on and off. Now, we've seen mid caps, small caps doing well as an index, but then real estate index has been consistent. In fact, I remember doing this monthly analysis where I think 5 months on a trot in the last 12 calendar months for 2023, real estate was the top performing index.
Is that largely because of the DLF weightage on the index?
Yes, largely because of that.
So should we read too much into the real estate index move, or say that okay, it's a skewed index where the weightage of DLF is so large that anything happening in DLF will have impact?
It'll always be the case, because when a one stock has a higher weightage, the entire index will be skewed. But then we also have to look at the price performance for other names: Godrej Properties, Sobha, Prestige. There are top names and there are those mid-cap names. All of them have done pretty well. So maybe DLF could probably have been the leader, but then the others have also performed. They have not underperformed.
That's how real estate stocks are moved. I mean, this is like a dream come true scenario. Real estate or real estate stocks, if you bought real estate stocks, you made more money. I don't think anywhere in India real estate prices have gone up 2x in last 1 year. But stocks have moved in anticipation of what will happen in the next 3 years or 4 years in 1 year. That's how real estate stocks have moved. So let's look at 3 stocks which you think are technically looking strong. Give me the names, we'll fire the YTD chart or the 3-month chart.
So I'll first look at it from the other way around, which are the ones which are not looking attractive. So I did a very simple analysis of how the stocks are placed with respect to their big long-term moving average, which is 200 moving average. You'll be surprised to see that stocks like Sobha.
This is DLF, I'm assuming.
Yeah, this is DLF.
Not DFL.
Correct. Okay. So stocks are up almost 100% above their 200 moving averages. So the margin of buffer for these stocks is not there for anyone who's looking to buy at current levels. That's the bigger concern for these names. Anantrat, Sobha, 95% above their 200 DMAs.
What is the meaning of 50 DMA and what is the meaning of away from 200 DMA?
So for example, if a stock is poised at say 150 rupees and the 200 DMA is at 100, which means the stock is 50% above the 200 moving average. The more divergent the stock is from long-term averages, the more skewed is the return. So buying the stock is like you're buying at the peak, possible peak in terms of divergence, and anytime whenever the stock gets into a correction, whether it's a price or a time-wise correction, you'd be left with buying the stock at a very high price.
Okay, so let's go back to that graph again where Kunal is saying that these are the stocks with a margin of safety even for a trader. Correct. See, trading is about buying momentum. You don't care so much so about the 3-year view. You look at the near-term momentum. And momentum also sometimes reaches what could be called as overbought zones. And Kunal feels that these are some of the stocks where none of the real estate stocks actually are giving you margin of safety.
Yeah, there are a few of them which are giving a relative margin of safety, because if you're talking of 100%, then there are stocks who are falling in the 38-40% category also. So if you look at the next slide.
So let's explain the slide. This is how things are stacked up.
These are the stocks where the margin of safety is still there.
Okay.
So these stocks are 9% above their 50 DMA, 36% only above their 200-day moving average.
And where the margin of safety is not there?
Yeah, so Prestige, the margin of safety is there. Oberoi Realty, the margin of safety is there. And Godrej Property also, the margin of safety is there. But the margin of safety is not there into the top two performing names so far. That's DLF and Anant Raj, where these stocks are almost 100% above their 200 DMAs.
Let's look at the blank sheet now. Now, why has real estate done well? Real estate has done well because in real estate, affordability has come back. The sector is coming out of a 10-12 years, 7 to 10 year consolidation. Very few players are left after RERA, and most of the companies are very balance sheet conscious in terms of how they want to grow their balance sheet and how they really want to grow their balance sheet going forward. So Kunal, let's look at what to avoid in real estate. Right? Number one?
I would say DLF if you're a long-term investor.
Avoid. Number two?
Anant Raj.
Number three?
As of now, only these two to be avoided.
Two stocks which should be avoided.
Yeah.
Okay. So if one is looking at buying real estate stocks, buy everything, but don't buy Anant Raj and DLF.
Correct.
According to you, the margin of safety is not
Exactly.
there. Okay, fair point. In general, if one is owning any real estate stock, book 15% profit.
Yeah, I think these are very good levels to book profits for these two names specifically.
DLF is an FNO, go short.
Not to go short, Nikunj, because see, when prices consolidate, it could be a time-wise consolidation where these stocks may remain stagnant in a band of 10% for 3, 4, 5 months. So, investing at these prices, you may have to have a waiting period, which is extensive, or you may be at a point where the stock may fall down. That will depend on the overall market construct also.
Okay. Right, Kunal, thank you very much. Always a pleasure. And that's Kunal's view on real estate sector, where he feels that in the near term, if you're really looking at buying real estate stocks, two stocks do not offer the technical margin of safety, which is Anant Raj and DLF. Guess what? We also had the management of DLF, and he was pretty excited about where the demand in the NCR region is likely to move now.
My view is that given the fact that we work significantly in the premium luxury and super luxury market, there would obviously not be any mindless price increases. That is fair. But the fact is that as the demand continues to strengthen for the more credible brands, be it Lodha or be it us, I think there will be an upward movement in pricing, at least to the extent of offsetting inflation, not just wages, but also the material commodity inflation. So clearly there should be no dilutive effect of inflation on the products. And right now, it's a fact that the major developers are also benefiting from a slight constriction in supply because a lot of the mid-sized developers had gone out of business. As some of them hopefully begin coming back, I think this would lead to some moderation. But I think there would continue to be a slightly upward bias in the prices. But I think the key is not to ensure that it doesn't hit a rate where it sort of makes affordability a challenge in the hands of the people who are buying it.
All right, let's take our queries from our viewers. Sanjeev Basin is ready. He's had his lunch. Apparently, Basin Saab, what was that? Chola bhatura with gajar ka halwa is what I've been told is what you ate for lunch. दिल्ली की ठंड के मजे ले रहे हो आप?
नहीं, लंच ऐसा कुछ नहीं था. लंच तो एक सैलेड था, बट हाँ ठंड के मजे ले रहे हैं. ठंड में सब सुड़क रहे हैं और
Cannot hear Basin Saab.
Very very cold.
Maybe his audio is down. Not able to get the response from Basin Saab. Maybe Basin Saab.
Yes.
छोला भटूरा and गाजर का हलवा दोनों खाया था लंच पे?
नहीं, मैंने तो सैलेड ही खाया था निकुंज. और आप आएंगे तो छोला भटूरा और चना खाएंगे, वो गाजर का हलवा आपको खिलाएंगे दिल्ली में.
Okay, let's start our query segment now. We've got our first query: 100 shares of JSW Steel. Buy, sell, or hold. Now, Basin Saab, JSW Steel has a huge advantage. They are one of the most brilliant cost producers. They are actually a converter. They maximize in a upcycle and they don't lose too much in a down cycle. Their dependence on imported coal is reducing, and it's a flagship company of JSW Steel. If that is the introduction, should one simply hold on to JSW Steel as a stock?
Correct. It is the most integrated steel player in the country, and like you said, both downstream, upstream, it benefits from both. I think they've got everything from captive, from coal to iron ore, everything within their integration. And I think this is the best play now for steel prices to go up, along with Tata Steel. It has consolidated well, but I think this is well on its way to 1,000 rupees. So hold would be my call on metals, because I'm very bullish on commodities.
Next one, and before I introduce NBCC, I must give credit to Basin Saab. I think 3 months ago he started talking about NBCC. I was not very convinced, because if I look at NBCC, I used to always think that look, ultimately it's a cost plus model. But this time I went to Delhi, the places and the kind of construction they've done, it is absolutely miraculous. I mean, it's a government company, they don't have land issues, and what they're doing in Kidwai Nagar, what they're doing in South X and a lot of other areas, it's absolutely remarkable when you see the construction. So Bachin Saab, great call. Now let's address this query which is from Rahul. और दिल्ली के हैं तो NBCC के construction उनको मेरे जैसे दिख रहे होंगे. 16,000 shares at 50 rupees.
Superb. I know it's been a long wait, और आपको पता है there was litigation cases against the land authorities and so on. वो सब हो गया है. You rightly pointed out. आप नेताजी नगर में देखो तो it's a transformation. Tier 2, Tier 3 में everything to do with land development of the government is done by them. CPWD के सारे contracts इनके पास हैं. It's a debt free company. अब आप 50 वाला 100 हो गया, आपको मुबारक हो, लेकिन ये 125 तक जाएगा. So if you can stay on, 125 is your target. If you want to keep a stop loss, stop profit, keep it at 85 rupees.
And the last one, I think it's an evergreen stock, ITC, at 258 rupees. Shekhar from Bangalore. Shekhar, congratulations. I mean, I can say that ITC, I think, is still one of the cheapest FMCG stock. FMCG is turning around. Cigarette volumes are turning around. Hotel business is in a good shape. And when the company is firing full cylinders, Basin Saab, I guess one should not be in a hurry to sell it. That's my view. Aap bataएं.
Correct. It's a bluest of blue chip in your portfolio. It took 3 years for market to realize its ESG risk and so on, and they are mitigating that by quarter on quarter by reducing sustenance on cigarettes. But the other businesses, from being the third largest franchise owner of ITC Hotel, which has 7,500 rooms, to Starbucks Paper, which is ITC Bhadrachalam, and to the FMCG side, which is roaring. I think sum of parts, this is a very, very good stock to own, and let the market play out and let the businesses flourish. And as the earnings grow, this is, like you said, one of the cheapest FMCG stroke, hotel stocks available right now. So hold and stay with it would be my call.
Second one is Biocon, and he's actually looks like committed a large quantity to Biocon. I bought 1,000 shares at 225 and 20,000 shares at 200. How's Biocon looking for long term? Basin Saab.
So Biocon has undergone a little bit of transition, but I think it's one of the best plays on the insulin and the diabetes side. And I think that business is a universal business in India over a period of time. They've had some cost issues and margin pressures, but I think those are past. This is a very well-run company. It has undergone a lot of processes. I would look for at least 350, 375 once the quarterly results come in. This stock can be a relative outperformer. Stay with it.
Biocon in last 5 years has not given any returns, frankly. I mean, it has really underperformed the market. Let's look at the 5-year chart of Biocon. 2019, where the world got hit with COVID and the world got normalized after COVID. Let's look at the 5-year chart of Biocon. So the 5-year consolidation, I think, in Biocon is large. I mean, it has not given any returns. Vasin Saab, 10% negative hai. Second, they have a biosimilar business, and that is like the treasure pot they are sitting on. मतलब उनके जो you can say that उनका जो खजाना है is the biosimilar business. Biosimilar globally has bottomed out, and Biocon has to deal with debt. Can they really monetize the biosimilar business? Can they really monetize the statin business? If they are able to do that by PE investor coming in, or if they are able to reduce the debt, trust me, Shekharji, Biocon will not be available here like Basin Saab said. The problem is that the generic business, Basin Saab, is just not stabilizing for them.
Correct, and you know that they spun off one part into diabetes, that is Syngene, which has been a good performer. And rightly said, it's how fast they can get valuation for some of the molecule or the statin which they have. I think, Nikunj, the market is changing and getting, more accustomed to their model. And once the debt reduces, this can be a huge outperformer. It has everything going for it, but like you said, couple of quarters have been weak because of margin pressures on the external debt and some of the cost pressures. Because you must realize Biocon is going to spend 8% of its turnover on R&D, and that will be a constant endeavor. But overall, I would say, Kiran Shaw has been a stellar market leader as far as clinical trials, as far as molecules, and I would stay with the course. I think this year, 2024, could be the year of Biocon.
All right. Thank you, Basin Saab. Thank you, Shekhar, for your queries. Thank you, everyone, for tuning and watching the show. Please keep your queries going. We'll try and accommodate as many possible. If there's a sector you want us to analyze for you, please write it for us. If there's a market voice or corporate voice you would like to get on the show, please write to us. Thank you for watching the show. Tracking Trends. You're watching Tracking Trends with Nikunj Dalmia.